Welcome to the DSG Podcast, exploring the intersection of on-chain and traditional finance. As a digital securities platform committed to open finance, we bring you insightful conversations with industry leaders and innovators, exploring the evolution of capital markets. Whether you're a finance professional trying to raise capital or curious about on-chain finance, tune in for grounded perspectives on where finance is headed. The content shared in this podcast is for informational purposes only and does not constitute financial, legal, or investment advice. DSG does not endorse any specific investment strategies or provide advice specific to any individual's circumstances. Listeners should consult their own investment advisors before making any decisions based on the information provided. Now let's get started. All right, welcome back everyone. Today with me I've got a guest, Chris Jaloris from AUDSC. Chris, great to have you on the podcast. Hopefully today we can talk through, what you're up to, the basics on stablecoins and kind of what you guys are doing a little bit differently. So welcome.
Thank you very much for having me, Ryan. Pleasure to be here.
Awesome. Cool. So why don't you start off by telling us a little bit about how you got here, your journey to here, and what made you want to innovate in the stablecoin space?
Yeah, so we're an Australian-based stablecoin company. For those who don't know, a stablecoin is a currency that's pegged to its local denominated dollar. So we are a Aussie dollar that's on the Ethereum blockchain, and we are pegged to the Australian dollar. So $1 Australian dollar in fiat equals $1 Australian dollar on the blockchain, and that's pretty much a stablecoin. But yeah, I'm a Sydney-based business owner, investor, crypto enthusiast, I guess you'd call me. I could sort of say I was a bit late to the game in getting into crypto. I did initially get in that early XRP gold rush of 2018, which is quite ironic now when we look at the markets. But then I more doubled down, I guess, in 22 in the bear market. And the thing that stuck with me there is a lot of us crypto buyers like to buy high, sell low, quite ironically, which is the opposite of what we're trying to do. But I saw stablecoins, in a down market, you sort of need those to shield yourself from the epic drawdowns we can experience. So that's why I thought stablecoins, they need to grow. They have value. They're good for global transactions. So that's why we dived in.
Awesome. And tell me about your co-founder.
Yeah, so we've got a few co-founders in the team. We have Raj Arora. He's a terrific guy. He's been in another business with me as well, so he's got a lot of acumen in the space. We have another one in the team called Costa Controllers. He is an accountant, so we thought it was quite fitting to have someone in that space within the team. And then we've also got another one in the team, and he's based at another tech firm in Sydney. So yeah, a bit of a mix of us at the moment, but we all sort of got different skills, and it all comes together pretty nicely, we find.
Awesome. And I know in the past you and I have talked about a Web3 gap. Why don't you expand on that a little bit and how your project fits into that gap?
Yeah, so it's pretty funny. I think the crypto market cap is touching $4 billion US dollars. Of that, there's about $300 billion US dollars in EU in USD stablecoins. And then
is that trillion, Chris? Is that
300 billion, sorry.
Oh, gotcha. Yeah.
In the USD stablecoins, and then 4 trillion global. So about 8% of the crypto market cap is stablecoins, and then in the long tail, the next one that comes through is the Euro stablecoin at 100 million. So stablecoins are sort of nascent in the crypto industry, but they're proving themselves very important. So when you see something like the AUD, most people don't realize it's actually one of the top 4 traded currencies after USD, Euro, Japanese yen, Great British pound, and then the Aussie dollar. And then I'm pretty sure the New Zealand dollar must be 5th, Ryan.
15th.
So yeah, it's actually a very important currency in the world. So that's why we thought it would be a good time to get on board and bring it into Web3, because there's so many fantastic things like technology, Web3, blockchain, crypto, which all sound like buzzwords, do really have and will sort of come to light over the next few years.
Yeah, I really, me personally, I think Web3 is is just kind of starting to get that kind of momentum into
Yeah,
the kind of, what would you call it, like mainstream adoption type of thing. And I think a
yeah,
big part of that is technology that is easy to understand and reduces that barrier to entry. And I think everyone, intuitively knows what a stable coin is and looks and feels like.
yep,
A dollar that moves at the speed of the internet and has lots of possibilities. Um, maybe, I mean, there's been, some changes in different types and styles of stable coins, over the last kind of 5 years. Do you want to
yep.
give us a brief history of stable coins, maybe some of the things that didn't work so well, and then maybe link that back to the approach that you went with AUDSC in terms of the structure?
Yeah, for sure. It's a good question. So stable coins, they actually started in 2014, and funnily enough, the biggest one, Tether, also started in that year in 2014. So they're actually 10 years old now, which a lot of people don't realize. And I guess over that time, there has sort of been two, you'd almost call it schools of thought in stable coins, and that being a reserve currency backed stable coin, um, and then the other one being an algorithmic stable coin. And the two prominent examples of algorithmic stable coins have so far failed pretty spectacularly. So the market tends to want a reserve asset-backed stablecoin, which is what we've gone for. But yeah, back to your question, Ryan. So an algorithmic stablecoin is a currency, a stablecoin that doesn't actually have any dollars in the bank backing it. It's some pretty complex code, which someone smarter than me has come up with, that is meant to, if you try and redeem your dollar on chain, it's meant to, through code, give you $1 back. But we sort of saw during 2022 with Luna and the UST stablecoin. That's not USDT, UST. Their company collapsed, and a lot of people lost a lot of money in that. So yeah, we've got a stablecoin where every dollar that's on chain is backed by $1 in the bank. So your money's always secure.
Yeah, that's a really big one. And yeah, unfortunately, there have been a few, as you said, spectacular failures in the
Yeah,
algorithmic stablecoin department, and some of that, you could argue is through like attack vectors. And in theory, if there's this complex mechanism to keep the value pegged,
yeah,
it often doesn't account for actually bad actors trying to break that
yeah,
for a variety of reasons, and that's most likely what happened. So, yeah, going towards the good old-fashioned asset-backed kind of approach is great. And then, what confidence do users have that those reserves are actually there and backing it? Like, what are the checks and balances in place for that?
yeah. So we have all our reserve funds held at the moment in a local fintech firm. So they're like a bank. They're really great to work with. In 2025, we're going to do online publishing of all our reserve funds. So that will be another tick in the box, I guess, in that department. But yeah, at the moment, as I said, we've got an accountant in the team, and his firm has been going for many years. So it's good to have someone who sort of specialises in that, handling money, transacting, understanding the books of how a business should look. What you need, and their experience in that is sort of what gives it people security in knowing that AUDSC is run by a team that's genuine, as you said, no bad actors. Yeah, we're not here trying to create something that's going to put harm to the industry, because a lot of people in crypto can do that. There's a lot of scams, a lot of phishing links. We know it's a good technology, so we want to build on that.
Awesome. So, any project, including stablecoin project, there's like a progression in terms of, you get like an MVP, then you build on more features and more kind of ecosystem around it. Whereabouts are you guys in that journey? Like, what have been the milestones up to now, and then kind of what's in the near horizon in terms of upcoming features and usability?
Yep. So we're pretty fresh. We launched on the Arbitrum and Ethereum networks in April this year. So it's still exciting, new, fresh company, which is it's really great. Yeah, we have a few things coming up. We actually met Ryan at the Oz CryptoCon, so from that it was a fantastic day. I believe they're going to do it in Sydney again, so that bodes well for us Sydney siders. And from that, we've developed a lot of partnerships. We've seen a lot of demand for the product in Asia. So Singapore, Hong Kong, those markets, they definitely want to denominate in AUD. There's a lot of AUD expats from there, and getting money efficiently from those markets back to Australia are things that we're seeing that we're going to definitely look to grow into. And then also just how we can serve the local market as well. And, we've got things coming up, so as they come up, we'll share them, but people can be assured it's coming. And then, so what we've got, we're on the Ethereum blockchain and Arbitrum network. We've focused there so far because without getting into the depth of it, crypto, it's very fragmented where the money is. So you sort of got to focus on one area, so all the liquidity can build in one place, which creates more value for a crypto token because more people transact it in the one place. You can get better DeFi yields, which is just, I guess, the interest return on your money when it's in one place. So that's why we went down that route.
Awesome. And for maybe those that are a little bit more kind of technical, have a little bit more of a background, what does it look like? And I'm just asking this out of interest. What does it look like? We know that like bridges are some of the most vulnerable parts of a stablecoin ecosystem. What are the options out there for a stablecoin project to help pool liquidity across different chains? Like what options are there?
Yeah, well, that's a really good question. I guess more poignant since the largest cryptocurrency, Ethereum, and its blockchain sort of fragmented a lot lately. But yeah, in terms of pooling liquidity, I guess there's things coming up which is maybe beyond our control, like the Uni chain on Uniswap. So they're going to have all liquidity centralized there. So that will help if we've got AUD on Arbitrum and on Ethereum and eventually on Optimism and Base. When projects have things like that and liquidity is pooled just by a app, that will help our tokens and all other tokens. So yeah, it's a bit more technical, and maybe it's for some of the developers on other projects to help pool all that liquidity together. But we'll just keep growing our thing, and when that side of the technology helps us, we'll be laughing.
Awesome. And why go with Ethereum? Why go with EVM chains?
Yeah, well, Ethereum's a good chain. Like it's been around since I think 2016 the token launched. So Solana or something is since 2020, which is the nearest comparison. Tron, another one that's really popular for USD denominated transactions in Africa and South America. So it's good for stable coins, but not so much for DeFi. Yeah, and then BNB, I guess that's Binance centric, and it's got a thing. But yeah, we chose Ethereum because it's large. There's 450 billion USD market cap, so a lot of economic security there. It's never gone down. There's a lot of people, developers working on it in the background, so it's going to keep upgrading, updating. So that's why I went for Ethereum. There's just a lot of stuff there. So I go to Woolies and Coles in Australia because they're the biggest supermarket. So maybe Ethereum's the biggest supermarket.
Yeah, no, that's a good analogy. And working in the space as you are, you'll be keeping a tight eye on kind of the EIP proposals and kind of ongoing potential adjustments to the Ethereum kind of base chain. Do you think there's any chance in the near future that actually operating on the base chain will be kind of scalable with those updates, or do you think layer twos are kind of the future going forward?
Yeah, that's a good question. I guess there's a lot of people working on it. I know, we're getting into the depths of it now, but Justin Drake had his Beam Chain concept that he released at the Ethereum conference a couple of weeks ago, and they're definitely working on a lot of things to kind of bring it all together. So yeah, the layer twos I think will eventually feel pretty seamless. in terms of interacting with them or the layer one, because there's so many people working on it, and there's a lot of money behind it as well. So whoever wins will definitely be economically rewarded, which I guess is what makes the world turn. So if there's money backing it, then there will be someone who figures it out, and whoever it does will they'll be rewarded handsomely. So yeah, I think all the layer twos will feel seamless with the layer ones, and then I think also each independent layer one will eventually feel seamless with other layer ones. So I think that's the end state. It's like the internet. I think it was very clunky at first, and then over time you just 2 clicks and you've got what you want. I think like crypto, blockchain, digital assets, sort of however you phrase it, that will be the same. It's just in the early stages still.
Yeah. And that's why at DSG we also built on Ethereum and EVM, because if you think about that future where the interoperability allows that seamless experience, you can see how, well, I can see how that kind of EVM framework is probably going to be the first ecosystem to make it to that state. And I think Unichain and Unichain through Uniswap is a good example of that. And maybe it won't matter so much about what L2 you're on. Maybe there'll be different flavors for different things, and it'll be more seamless. But hey, that's part of the exciting future, right? We don't know.
For sure.
Awesome. So let's go back to your you gave example that there's people in Singapore and Hong Kong that might want to use your stable coin to send money back home or whatever. Let's pick apart some of those use cases. So why don't you walk us through a couple of scenarios of different users and what they would use the stable coin for?
Yeah, so I guess I will start with where you started. So, and it's sort of where we see it going as well, as where it is now. So, a lot of the Australian economy, New Zealand economy too, I guess it's pretty globalized, and we rely a lot on people coming in. So, Indian, Singaporeans, all of Asia and everything. It's very important two-way trade between Australia and those countries. So, and a big thing is a lot of them do send money back as well. So we see that the AUD will eventually play a role in that as well. It's a much more efficient system than going on SWIFT. The fees are lower. It's near instantaneous instead of taking 2 days. So you can get money back and forth. Like I remember when I first got into crypto, I wanted to buy a Bitcoin miner from Italy, and I sent the money through the bank transfer, and I think it was actually a good thing in the end. The money didn't make its way there, and I found out after 2 days. So it got refunded back. So I go, oh, well, I'll just buy Bitcoin instead. So that's not really a good system. If you're trying to get money overseas and it takes 3 days and then you find out that it's not there in the end, if that was something I really wanted, I would have been pretty upset in the end. So stablecoins have their place there. Also in Asia, in South America, like USD stablecoins, they've actually taken up 60% of crypto transactions there. So because they experience 200 to 300% inflation there, locals are actually denominating in USD stablecoins for commerce, because they're finding it's a way out compared to the local currency. So AUD could take place there as well if anything were to happen to the USD. I guess we're hoping you can sort of look now on Aave and Curve. This is another use case, I guess. The returns there for money at the moment is 9% by a peer-to-peer lending system, I guess you'd call it. So for those who don't know Aave, that's what that is. So 9% is a lot better than 4%, 3% that you'd get in the bank, 5% on a good day. And that's with a lot of restrictions too, like sort of transactions in and out, minimum amounts, minimum spend. So it's your money and you're getting returns without an intermediary. So that's another thing, DeFi yields. And then, just instant peer-to-peer transactions as well. So in Australia, we're pretty lucky. We've got OSCO, which when it feels like it, you can get, a 10-second transfer to someone. But when it doesn't feel like it, it's a next day thing. I think New Zealand's like that too. If you can get a AUD transaction on the blockchain, it's instant, goes there straight away. If it's without Visa or MasterCard, you save on those fees as well. So it's near free, near instant, it's global, plugs into your internet if you've got a DeFi wallet plug-in. It's pretty cool.
And just for like an order of magnitude understanding for the listeners, let's say you want to send anything from $1 to $100,000 through stable coins through Arbitrum, for example.
Yep.
What kind of fees are you looking at?
I haven't looked lately, but it's 0.00001 cents, so it's pretty cheap. You can buy a few coffees with that.
Yeah. And that's good because already since COVID, we've seen lots of establishments move towards cashless, and you get kind of lazy with the tap and go, and some of those fees are anywhere from 1 to 2, even more like percent.
Yeah.
And that definitely adds up. We don't think about it when it's a coffee, but when it adds up over time, it's a pretty big like extraction of value from the economy. And that's it's out of our wallet, it's out of the cafe's kind of bottom line, and that kind of sucks. So I'm a big believer in the ability to be able to undergo commerce, and if it's not cash, then something that's kind of digital cash like. So 100% on board with that one.
Yeah, and that's the thing. Even if stablecoins don't take over the whole market, I guess Visa and MasterCard will see what the opposition, I guess you could call it, was doing. So it will definitely keep them honest, because I think, sort of as you said, like the fees are going up. So when they see that there's a competitor with these kind of rates, then hopefully at least it keeps them honest.
100%. And one thing we haven't talked about yet, kind of smart contracts and kind of atomic settlement. So you mentioned wanting to order something, but there being that settlement time. Tell the listeners a little bit about what smart contracts and atomic settlement kind of means for commerce.
Yeah, so cryptocurrency, I guess Ethereum does have a 12-second block time, which technically means there's a 12-second confirmation, but that's with technology coming down. So Arbitrum's got something called pre-confirmation, so that negates this 12-second time that you should send your money for it being received to, I think it's 200 milliseconds or something. So that's the near atomic confirmation. And then on the smart contract thing, a smart contract, it's pretty much like a digital agreement on a blockchain network that sort of executes automatically when the contract that is sort of written into the code are met. So I guess an everyday example for a stable coin would probably be if someone were to use a stable coin on chain, you could have a contract, a set of code where, just say you're on Aave and the code is set that your loan needs to have a 20% cash or stablecoin to value ratio. So 20% needs to be AUDSC and 80% you can get a loan. If for some reason you keep borrowing and you borrow beyond your 20% deposit, then that gets automatically liquidated, and the contract and the code is the one that does it for you. It's not with the intermediary like a bank or a loan broker or anything. It's just through code and contract. So it's just a super efficient system if people can kind of get their head around it. You would obviously have to be responsible in how you're acting, because the code will do what it needs to do. But yeah, it's just super efficient system. It's not people, it's code. And that's a smart contract.
Yeah, awesome. Let's pivot slightly. Where do you guys fit in? Obviously, you're dealing with a bit like a cash, what could be perceived as like a cash equivalent, right? A currency equivalent. So from a regulation and compliance point of view, where do you guys fit in the Australian system? And kind of tell me a little bit about your journey to get to where you are through that.
Yeah, so at the moment, like all this, like I guess it's quite a nascent industry, and the regulators haven't come out with a lot of regulations so far. So there is something called DCE accreditation, Digital Currency Exchange accreditation. So that's a compliance from AUSTRAC. And yeah, we've got that. So it's mainly in relation to anti-money laundering and KYCing of customers. So because it's still new, the government and us as well, we want to make sure that all the users coming on board are compliant. They're not bad actors, they're not scammers, they're not criminals. So just making sure that everyone who does come on chain, is the kind of person that you do want on chain. So that's the current regulations. We're sort of looking forward to more coming. I think there was a release a couple of days ago that something might be coming. So definitely as it comes out, we'll be privy to working towards it for sure. But what we need so far is that, and that's what we've got.
Awesome. And is that more to do with the off-ramping and on-ramping of the stablecoin to fiat? How does that work?
Yeah, I guess so. Yeah, the anti-money law, the Australian regulation has a lot of things. There's customer due diligence, which sort of links to the on-ramping and off-ramping. You got to sort of monitor large transactions as well. It's called transaction monitoring. So there's a breadth of things, but yeah, the crux of it is mainly with on-ramping and off-ramping.
Yeah. So if I wanted to go on now and convert 15,000 AUD like fiat dollars to your stable coin, what would that process look like for me?
Yeah, so we've got an online web app where you can log into the portal. We KYC, AML you, not AML, we just KYC you, so know your customer is what that acronym stands for. So we've just got all those, we get all that, and then yeah, once it's all approved, you can pretty much go in, put your credit card details in, and off you go to spend AUDSC. There's also money in DeFi protocols. So if you had USDT or Ethereum or another token lying around that you wanted to convert, then that's there as well for that channel as well.
Awesome. So the off ramping and on ramping is kind of going from the traditional finance system into the digital finance system.
Yep.
And then lots of things happening in the digital space, but to be able to bring that back into Australian dollars, like traditional currency, do people have to come through your web app to be able to convert from AUDSC to AUD?
Yeah, at the moment it's through our web apps. We've got a few partnerships coming up, so it will be through some other channels as well in the near future. But yeah, at the moment it's that. But yeah, stay tuned. There's more coming.
Awesome. And if you look at over time, how well AUDSC is pegged to the AUD, have there been any like dips or anything like that over time, or has it been pretty rock solid?
Yeah, no. Generally, it's generally been pegged to where the AUD is at. There's been no Silicon Valley Bank moment where, like USDC, where Silicon Valley Bank went down and the currency went down 10%. So no, we haven't had our SVB moment, Silicon Valley Bank moment. So all good.
Awesome. So let's say I go through that process, I convert, and then I've got my digital wallet and I've got 15,000 AUDSC. What are my options for trying to generate a bit of a yield or some kind of rewards on that?
Yeah, so at the moment, you can just put it in a DeFi protocol, Uniswap, Curve. We've actually put a proposal into Curve protocol. So they're a big stablecoin exchange, I guess you'd call it, DeFi exchange. And they incentivize users with the Curve token. So a user, in the DeFi protocols normally get anywhere between 4 to 8%. But if just say we get this Curve protocols approval from the DAO, a lot of acronyms coming in there, but just say we get approval, you'll be able to win extra Curve tokens for holding in your AUDSC in their protocol. So, instead of going from 4 to 8%, you could go to 8 to 16%, which is really cool for having liquid money, liquid in terms of you can pull it in or out whenever you want, not locked like a term deposit, and potentially get up to 16%.
Awesome. So that let's say that curve protocol. So it will be a combination of curve tokens
Yep.
and what would the combination be of rewards?
Yeah, so it's whatever's in the pool at the time. So on Curve, for example, it's normally like mixed stable coins. So it might be AUDSC and then USDC and USDT, say. So rewards come in the form of trades within those three tokens, and then just say you win the other aspect and you get the boost with Curve tokens. The rest comes in that. So yeah, you get more of the current token you've got plus whatever else is in the pool. So maybe USDC, and then on top of that, a Curve token eventually. So yeah.
Awesome. And how else have you guys thought about? Because obviously, incentivizing users and rewarding users is a big part of getting any product out there into market. What have you guys thought about general incentives and like rewards for users?
Yeah, so we definitely want to grow the token, and sort of how I alluded at the beginning, like a Euro stablecoin is the first one to get to 100 mil outside of USD. So I definitely think incentives are necessary. So when we onboard partner platforms as well, I guess centralized ones, I guess you'd call it, if they're able to, when they're able to get users on board with AUDSC, will help incentivize those users just out of our company's kind of purse to grow the grow the share of AUDSC on chain. So yeah, we'll definitely incentivize because we think that's a big part of growing.
Yeah, awesome. Um, and what else are you without giving away too much juicy stuff? What else is on the roadmap for AUDSC in 2025 and beyond?
Yeah, so like we're pretty young, we're pretty keen. Next year we're planning to do a capital raise, so get a few more people on board. We're talking pretty closely with a few, I guess, TradFi players, so traditional finance players. So we sort of see that a stable coin in AUD, it sort of needs to be pretty seamless for a user, and we don't just want crypto users, we want normal people, I guess you'd call them. So we want people who are everyday users to potentially use AUDSC and not even realize it. Like the back end technology just be blockchain, and they don't know. They think it's traditional money. So yeah, we've got some TradFi partnerships we're working on in the coming year. Yeah, the capital raise. So there's a bit coming up, and we've got a genuine product, and I think genuine products people know, and they can sort of feel it when they use it. So hopefully that's part of it.
Awesome, very cool. All right, and just before we finish up, any kind of anything else you want to pass on to users about how to get involved with AUDSC?
Yeah, so anyone who, after listening to this, if they want to follow us, we are on we AUDC on Instagram, on Twitter as well. We've got a little bit of stuff there. You can go onto our website. You can email me, chris@audsc.com. Yeah, we just want people to get on board. We feel if a lot of people sort of believe in crypto and everything, then they should they should get behind local currency stable coins, because the more that local users sort of get behind them and create a bit of a community groundswell, and crypto exchanges and everything, if they all support these kind of projects in Australia and abroad, I think that's how we'll unlock value, because that's what crypto is. It's sort of a groundswell movement by users for users. So there's no reason stable coins should be any different.
Awesome, very cool. All right, and any other kind of socials and any other way people can keep updated with you?
Yeah, so those three, the Insta, Twitter, our web, yeah, email me by all means. Yeah, they're the main channels that they can get hold of us. And yeah, we're definitely happy to hear from people, anyone with any ideas. We're an open book. There's a few of us in the team. Yeah, anyone who wants to partner with us, we're so grateful to have you, Ryan, have us on the podcast, DSG, when we met you at the Oz CryptoCon. You had some fantastic things you're working on there, a bit outside the box, but I think that's what the industry needs to grow as well. So, and there's a lot of people like that in the industry, a lot of outside the box thinkers. So, So yeah.
Yeah, I really enjoyed the Aussie CryptoCon conference. It was, first of all, it was absolutely huge. It was just the magnitude of people building and doing really, really interesting things all the way through from to, what we do all the way through to like on-chain insurance and lots of
That's
industry
a cool
there.
space.
Lots of great speakers. So definitely looking forward to next year as well, for sure, for that. Yeah.
Sure.
Awesome. All right. Well, thank you much. Thank you so much, Chris, and look forward to keeping an eye on what AUDSC is up to in the future.
Thank you, Ryan. Thank you, everyone.